Hi, welcome to my channel, Second PUC Accountancy, Learn, Understand and Excel. Today, let us see another 12 marker under dissolution of a partnership firm. So this is the question given under dissolution of partnership firm, 12 markers. Anand, Chandu and Vijay are partners sharing profits and losses in the ratio of 2:2:1. And the balance sheet as on 31st March 2023 is given as follows. So this is the balance sheet given here. So we have assets and also we have cash in hand. On the asset side 5,000, cash at bank we have 16,000, debtors 25,000, bills receivable 5,000, investments 18,000, machinery 25,000, furniture 16,000. Now we have the liabilities here. On the liability side, creditors 15,000, earnings loan 5,000, bills payable 10,000, bank loan 8,000, profit and loss account 22,000, and we have the capitals of the three partners, Anand 20,000, Chandu 20,000 and Vijay 10,000. So the total is 1,10,000. Now these are the liabilities. Now in this liability we'll see creditors is an external liability. Anand's loan. Now if you see here, Anand is a partner. So Anand's loan will be an internal liability. Next we have bills payable and bank loan, which will be the external liabilities. Now the profit and loss account will be transferred to the partners' capital account and shared between the partners in their profit sharing ratio. And capitals of Anand, Chandu and Vijay will be the opening balance of partners' capital account. Cash in hand will go to the bank account. Cash at bank will go to the bank account, and the debtors, bills receivable, investments, machinery and furniture will be taken to the realization account to close the assets on the debit side. So these assets have to be closed in the realization account at the time of dissolution. It will appear on the debit side of realization account. And on the above date, the firm dissolved, the following information is available. The assets are realized as follows. Debtors 24,000, bills receivable 4,000, investments 15,000 and machinery 22,000. So this is how the assets which is given in the balance sheet are being realized, which will appear in the realization account. And here out of these assets, Chandu took the furniture 10,000 and creditors and bills payable are paid at discount of 5%. And at the end of the year, at the time of dissolution, we have noticed unrecorded investments that are realized rupees 4,000. So this amount is not recorded in any of the books, so it will be only realized in the realization account. And then we have dissolution expenses. We have to prepare realization account, partners capital account and the bank account. Now let us see the preparation of realization account. Now the assets except the cash in hand and cash at bank should be entered on the debit side of the realization account to close the assets of the firm at the time of dissolution. So bring it in the realization account debit side in its book value. To debtors 25,000. Next asset we have is bills receivable. So bills receivable, the book value is 5,000. Next asset we have is investments. So two investments 18,000. So we have to bring it in its book value. All these assets. Next we have is machinery. To machinery account 25,000 and the other asset is furniture. To furniture 16,000. So all the assets given in the balance sheet are brought down to the debit side of realization account and the assets are closed at the time of dissolution. Now the external liabilities, creditors, bills payable and bank loan should be closed by transferring it to the realization account in its book value on the credit side. So now let us transfer the external liabilities by creditors. Creditors will come on the credit side of realization account by creditors 15,000. So we have to write the book value, that is the value given in the balance sheet. Next we have is the bills payable by bills payable on the credit side 10,000, and the other external liability is bank loan by bank loan 8,000. So these are the assets and the liabilities which are closed in the realization account. Now these assets have to be realized or taken over, which has to appear on the credit side of the realization account. So the assets that are realized are given in the balance, in the adjustment as follows. So which will be entered on the credit side. As it is realized, it will be transferred to the bank account on the credit side of realization account as by bank account. So debtors are realized at rupees 24,000. Bills receivable is realized at 4,000. Investment is realized at 15,000. Machinery is realized at 22,000. And unrecorded assets, which is given in the adjustment, is being realized at rupees 4,000. So total of the assets that are realized is 69,000. So this is the total of the assets that are being realized. So all the assets are realized as per the adjustments. But here we can see that a particular asset furniture is taken over by Chandu. So it will be transferred to Chandu's capital account. So write it on the credit side of realization account as by Chandu's capital account, that is furniture taken over 10,000. Now all the assets given here are realized or it is taken over. So now we have to pay off the liabilities. Now as per the adjustment given here, the liabilities are creditors and bills payable are paid at 5% discount, and it is not mentioned, and so we have to transfer it to the bank account on the debit side. To bank account creditors, that is rupees 15,000 minus 5%, which will be 14,250, and bills payable is again paid off at a discount of 5%, that is 10,000 minus 5% will be 9,500. And bank loan, since it is not given in the adjustment, it is assumed that bank loan is paid in full. So therefore bank loan will be 8,000. The total of the liabilities paid off is 31,750. Now to do all these, there is a dissolution expenses which are to be paid by the firm. So dissolution expenses are given as 2,250, which should also be transferred to the bank account on the debit side of realization. To bank account dissolution expenses 2,250. Now all these entries are being made. Now we have to find the balancing figure. The total of the realization account, that is the highest total, will be 1,23,000. That is debit side is higher. So write the same total on both the sides, 1,23,000. So credit side is less, which will be the loss for the firm. So this loss will be transferred to the partner's capital account. So on the credit side, write it as by loss transferred to partner's capital account. So the loss will be 1,23,000, deduct the credit side total, which will be 11,000, shared between Anand, 11,000 into 2 by 5 in their old profit sharing ratio. That will be 4,400. And for Chandu, rupees 11,000 into 2 by 5, again 4,400. the loss borne by Chandu and Vijay, rupees 11,000 into 1 by 5, which will be 2,200. So loss of rupees 11,000 is being transferred to all the three partners in their profit sharing ratio, 2:2:1. So now let us see the next account, that is partners capital account. So we have three partners. So debit side we have Anand, Chandu and Vijay, and credit side again we have Anand, Chandu and Vijay. So first we have to bring down the opening balance. The capitals of the partners, which is given in the balance sheet, should be brought on as the opening balance has by balance brought down. So for Anand it is 20,000, for Chandu 20,000 and Vijay 10,000. Next, we have to bring down the profit and loss account, which is given in the balance sheet on the liabilities side. So this will be a profit which should be transferred to the credit side of the partner's capital account as by profit and loss account. So the total accumulated profit is 22,000, which should be shared between all the three partners in the ratio of 2:2:1, which will be 8,800 for Anand, 8,800 for Chandu, and 4,400 for Vijay. Next, we have to transfer the previous account's balance, that is realization account. We got loss. So that loss should be transferred to the debit side of the partner's capital account as to realization account loss, which is 4,400 for Anand, 4,400 for Chandu and 2,200 for Vijay. Now in this, the partner, one particular partner is taking the asset furniture. That is, Chandu is taking over the asset furniture of the firm. So it has to be transferred from the realization account to the Chandu's partner's capital account on the debit side as realization account. To realization account, that is the furniture that is taken over by the partner Chandu. So under Chandu's column, we have to enter 10,000, that is the furniture taken over by him. So now with this, the entries are being done in the partner's capital account. We have to find the balancing figure, which will be the final settlement that has to be made to all the partners at the time of dissolution. So that is the payment which is being made to the partners. So let us find the total, the highest total of the partner's capital account. So for Anand, the total, the credit side total is higher, so which will be 28,800. And even on the debit side, under Anand's column, 28,800, which should be deducted with the total of the debit side. And for Chandu, again, the total of credit side is 28,800, which has to be written on both the sides, 28,800, and we have to deduct Chandu's debit side total. Next, Vijay, the total of the credit side is 14,400, so which is the highest total, so write on both the sides, 14,400. Now this credit side total should be deducted with the debit side total to find out the balancing figure. So 28,800 minus 4,400 Anand and 28,800 minus 14,400 for Chandu and 14,400 minus 2,200 for Vijay, which will be the final settlement. So that is the balancing figure of partner's capital account transferred to bank account. So to bank account, that's the balancing figure, or that is the final settlement, 24,400 for Anand, 14,400 for Chandu and 12,200 for Vijay. So the partners' capitals are being closed. in this dissolution of a partnership firm. So now let us prepare the last account, that is the bank account. So in the bank account, we have to write all the payments on the credit side and receipts on the debit side. So first open the bank account with the balancing figure from the balance sheet to balance brought down, that is cash at bank, which is given in the balance sheet 16,000. And from the balance sheet, we have to also transfer the cash. The cash in hand should be transferred to bank account on the debit side as to cash account. That is the balance of cash in hand from the balance sheet 5,000. Now on the debit side of the bank account, we have to write the receipts. So here we have received the amount through realization of the assets. So write to realization account the total amount of the assets realized from the realization account, transfer it to the debit side of bank account. The total is 69,000. Now with this, the receipts are done in the bank account. Now we have to make all the payments. So first we have to pay the external liabilities by realization account. So the total of all the external liabilities we had paid should be transferred from the realization account to the bank account, that is 31,750. Next, we have to pay the dissolution expenses, which we have also debited in the realization account. So bring it from the realization to the bank account as by realization account. Dissolution expenses paid 2,250 on the credit side of the bank account. Now here, when we had noticed in our old balance sheet, there is an internal loan, that is Anand's loan account. That is the internal loan. Now the internal loan is paid to the partner 5,000. Next, at the end, we have to settle the partner's capitals. So payment of partner's capitals, that is the balance what we had derived in the partner's capital account, is being paid. So Anand 24,400, Chandu 14,400, and Vijay 12,200. So the total capital that is being settled to the partners at the time of dissolution is 51,000. So find the total of the bank account. So all the payments and the receipts are being done. The total on the debit side will be 90,000, and the total of the credit side also will be 90,000. So the debit and the credit are matching with each other. That is, the payments and the receipts are matching with each other. Hope it is clear, students. We'll see yet another sum with different adjustments in the next video. Thank you.